Hello guys, let's move to May June 2017. So this time around we are doing the bank reconciliation for honest traders. Okay, so this is the information. Here we have the bank reconciliation for the previous month, which was March, and now this is the bank statement for April, and this is the cash receipt journal for April. And here we have the total cash receipt. Here's the cash payment journal for April. Here we have the total cash payment. And now the first question asks you to complete the cash receipt journal and the cash payment journal. Okay, first of all, I have to let you know that in the bank statement we have the debit side and the credit side. Okay, so on the previous bank reconciliation we do have the debit and the credit side. So what we have on the previous bank reconciliation, we have the outstanding deposits and the outstanding checks. Okay, so now you can compare if these deposits for the last month are still outstanding, like the deposit for 10,000. So if you go to the credit side, you can see 10,000. It means it's no longer outstanding. Okay, we also have the outstanding checks for the last month, like this check number 247 or 4,750, it's here. The other check of 3,300 is here. The other check of 3,000 is here, but this check of 14,000, it seems like it's not here. So check number 14,000 is still outstanding. So the first question requires you to complete the cash receipt journal and the cash payment journal of honest traders for April 2017. So let's get started. So we have this formula of completing the cash receipt and the cash payment. What we are basically looking at, okay, please guys, I would advise you to replay what I'm gonna say here. What you are basically looking here is that the cash receipt journal indicates the items that we can find on the credit side of the bank statement. So we are looking for the items that are on the credit side of the bank statement, but they are not available on the cash receipt journal. Okay, so if we also do the cash payment journal, we're gonna look for the items that are on the debit side of the bank statement, but they are not available in the cash payment journal. For instance, we don't have 5,350 here on the cash receipt journal. If you look at the credit side of the bank statement, we don't have it. 4,000, we don't have it here. 41,000, we don't have it, but other transaction we do have them. Okay, for instance, 1,100, we do have it here. 3,850, we do have it here. 1,500, we do have it. 4,200, we also have it. So we looking for the items that are here on the credit side of the bank statement, but they are not in the cash receipt journal of the given information. So now basically these items are, okay, let's see how we do the cash receipt journal. Okay, number A, complete the cash receipt and the cash payment. So I want to show you how we complete the cash receipt. Start with the total cash receipt, and then the total cash receipt is here. Cash receipt journal, the total cash receipt is here, 13,250. You will come and say the total cash receipt is 13,250, and then you're gonna have to add with direct deposits. Okay, so if you can see here, we have two direct deposit of Mr. T Stevens and Mr. M Kumalo of 4,000 and 41,000. So now for Mr. T Stevens, the direct deposit is 41,000. 41,000. For M Kumalo is 4,000. And then we also have interest income. Interest income is right here of 535. So if you can look at this interest income, it's not here on the cash receipt journal. That is why we have to adjust with it. So the interest income is 535. So you come in at 8535. So how much will your cash receipt journal be? Okay, so if we add all of these, they will give us 58,785. so this is the amount of cash receipt journal. Remember, you take total cash receipt plus direct deposit plus interest income, plus we also have stale check, but stale check is not given in this question. Okay, yeah, a stale check is a check that has lasted for more than 6 months before it has been cleared, so we don't have it right now. Okay, let's move to cash payment journal. For cash payment journal, you start with the total cash payment. How much is our total cash payment? Cash payment journal, it seems like the total cash payment is 28,150. So total cash payment is 28,150. You add with the direct deposit. So what you're going to add with here, these are the items on the debit side of the bank statement, and these items basically they didn't appear on the cash payment. For instance, we have bank fees of 655 is not there. Debit order of wealth investment of 6,000 is not also there, and the other debit order of for your way insurance 4,500 is not also there. So all of them, they're not here, so we add with them. So let's start with the debit order. Okay, the first debit order is your way insurance of 4,500. Debit order, your way insurance is 4,500. You add it. Okay, the other debit order is wealth investment of the other debit order of wealth investment is 6,000. You add it also, 6,000. Thank you. And we also add the unpaid or dishonored check. So the dishonored check, remember, is that check when someone pays you with a check which is beyond the balance he or she have in the account. So it means that check will be dishonored because of maybe he or she has insufficient amount. So we also add the dishonored check or unpaid check. So how much is our unpaid check? Unpaid check to Miss B Badu is 1,700. We also add 1,700. And then lastly, we have the bank fees here of 655. We also add them, bank fees of 655. And then what is the total? So our total, if we add all of them, will be 41,005. Thank you. So this is how you do the cash receipt and the cash receipt journal and the cash payment. And it was how many marks? It was 13.5 marks, just like that. So now let's move to bank account. So this is the bank account of the general ledger. So now prepare the properly balanced closed off bank account, 7.5 marks. So how do you prepare the bank account? So firstly, you need to recognize the balance of the bank account you started a month with. So the balance of the bank account, you will find it on the previous bank reconciliation statement. Here it's saying we have a credit balance as per bank account. So guys, I want you to know that bank is an asset. Bank is an asset. So asset, they are positive on the debit side asset again, they are negative on the credit side. So the cash receipt journal increases the bank, so they are positive to the bank, and the cash payment journal, they are negative to the bank. Okay, so now since on the credit side, that's where the bank decrease, and then in our information they tell us we have a credit balance as per bank account, so it means we have unfavorable balance. So credit what? Unfavorable balance, unfavorable. So if the balance is unfavorable, should be credited, or credit balance is the same thing. So this means that at the beginning of the month, which is April, the bank had a negative balance of let me see, it's saying it's of what, of 4,550. So you will come here and say on the credit side we have a balance which is unfavorable of 4,550. This is how we do it. I'm referring to this balance because they're saying we have a credit balance, so this balance should come on the credit side of the bank account. And now, like I said, the cash payment reduces the bank and they should be credited, because whenever you're paying out money, it means the bank is paying out money, is decreasing. So how much was our cash payment? It was for 1,005. So our cash payment was 41,005. And then on the debit side, the cash receipt journal increases the bank, and since the bank account is an asset, it increases on the debit side. So how much did we have on CRJ, which is cash receipt journal? We had 58,785. We have 58,785. Now you need to compare the two sides. You have the credit and the debit side. If you look at these balances, which one is greater than the other? So it seems like 58,000 is greater than the total of these two. So now our balance will balance at 58,785 because it's dominating, is greater than these two. So now you will add these two and then subtract them from 58,000, because this month you received 58,000 and you paid out these two amount. Okay, so how much are you remaining with, which is the closing balance? And then we're gonna have to subtract, and we'll get a closing balance of 13,230. This will be our closing balance. And if you add your closing balance with your cash payment journal and your negative balance, will also give you 58,785. Now remember, if you close your month with 13,230, so it means this balance you closed with should be brought forward for May. So it means at the beginning of May, your closing balance of 13,000 will be the opening balance. So for May, we'll have the opening balance of 13,230. So this is how you do your bank account, and then you will get your 7.5 marks. You see, to do the bank account is 7.5 marks. So that's all you have to do. Okay guys, let's move to the reconciliation part. Okay, number C, prepare the bank reconciliation statement. Okay, so this is how the bank reconciliation statement looks like. Okay, so remember, on the bank reconciliation we only record the outstanding transaction, like outstanding deposits and the outstanding checks. Okay, so now let's go to our bank statement and see how much balance did we have? Okay, so at the end of April we had a balance of 36,880. So do you see this balance is positive? So if the balance is positive, it means it's a credit balance. So we're gonna have to credit 36,880. Come here and you credit what? 36,880. Why? Because 36,880 is positive on the bank statement. So it means we have a positive balance of the bank statement. Now, what are the outstanding deposit? So this time around, I'm talking about the deposit that appears in the cash receipt journal, but they are not in the credit side of the bank statement. We have these two deposits on the 30th of April here. Mr. D. Smitten and cash sales 1,900 and 700. If you can look at 1,900 and 700 on the credit side of the bank statement, we will not find them. 1,900 and 700, they are not here. But what about the others? 4,200, 1,500. You see, 4,200, 1,500. They are in both columns. 3,850, 1,100. They are also here. You see, 3,850, 1,100. But 1,900 and 700, they are not in the bank statement. So it means these are the outstanding deposit. Okay, so the outstanding deposit should be credited. So remember, you credit the outstanding deposit. So outstanding deposit, I'll say I have outstanding deposit of 1,900, 1,900. The other one is for 700. Okay, and then let's move to outstanding checks. The outstanding checks should be debited. Okay, outstanding deposit should be credited, outstanding checks should be debited. Remember, we have been given the previous bank reconciliation statement here. On the previous bank reconciliation statement, we have a credit outstanding deposit of 10,000. So this deposit, I didn't credit it on our bank reconciliation because it appeared on the bank statement. So it means it's no longer outstanding. But if you can look to these checks, 4,750, check number 247 is there, so it's no longer outstanding. 3,300, it's also here, so it's no longer outstanding. But 14,000 is not here, so it means check number 277 is still outstanding. So we have check number 277, which is still outstanding. Check number 277, it's how much? It's 14,000. We also have check number. We go to the bank. No, not to the bank. We go to the cash payment journal. If you look at check number, if you look at check number 296 and 297 for 4,450 and 7,800, they are not here on the debit side of the bank statement. They are not here, so it means we need to adjust with them because they are outstanding. So we have check number 296 of Velcom 4,450, 4,000. You come and write here 4,450. We also have check number 297 of Vessel Distributors of 7,800. This one, we come and write it here 7,800. Now, one more thing, we are left with the balance of the bank account. So how much balance did we get on our bank account? So we calculated our bank account. The closing balance was 13,320. which was the opening balance for the 1st of May. So this is the balance I'm talking about. So if you can look here, this balance is on the debit side. Why this balance is on the debit side? Because we closed on the credit side. So if you close this side, next month the opening balance will be on the debit side, meaning to say the bank account has a favorable balance, because bank is an asset which is favorable or positive on the debit side. So we have a debit balance of 13,230. So coming on the debit side, we say we have a debit balance of 13,230. So let's add these two. So if we add, the balance for year and year should be equal. So I added them and it's 39,480. Even this side will give you 39,480. So this is how we do it, guys. Thank you.